Hey everyone, and welcome back to the channel. Today we are diving into some huge news that just dropped and sent the stock market on an absolute tear. I'm talking about the latest inflation report, the Consumer Price Index, or CPI, for November. And let me tell you, it was a big surprise in a good way. The numbers are in, and year over year, inflation for November came in at around 2.7%. Now, why is this such a big deal? Well, economists and market analysts were expecting a higher number. When the actual data comes in lower or cooler than the forecast, it's a signal to investors that the crazy price hikes we've been dealing with are finally starting to get under control. Think about it. For the past couple of years, it felt like everything was getting more expensive every time you went to the store. The Federal Reserve, the central bank of the U.S., has been aggressively raising interest rates to combat this. Their goal was to make borrowing money more expensive, which in turn cools down spending and slows down price increases. It's a tough medicine, but this latest CPI report is a strong piece of evidence that the medicine is working. Immediately after the news broke, the markets went wild. The Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq all saw significant jumps. We're talking a sea of green across the board. This kind of sharp, immediate rally happens when a big piece of uncertainty is removed from the picture. For months, the biggest question on every investor's mind has been, is inflation tamed? This report screams, yes, it's heading in the right direction. So, what does this mean for the average person and for investors moving forward? Let's break it down. For consumers, this is fantastic news. Slower inflation means your purchasing power doesn't erode as quickly. The money in your pocket goes further. While we might not see prices drop overnight, the rate at which they're increasing has slowed down considerably, which is a massive relief for household budgets. For investors, the implications are even more profound. This cooler inflation reading directly influences the Federal Reserve's next moves. The market is now interpreting this as a clear signal that the Fed's rate hiking cycle is likely over. They've done their job, inflation is cooling, and now the conversation is shifting. It's no longer about how high will rates go, but when will the Fed start cutting rates? And that's the golden question. The expectation, or the narrative that's now building steam, is that the Fed could begin to cut interest rates sometime next year. Why would they do that? Well, high interest rates are like hitting the brakes on the economy. They're necessary to stop inflation. But if you keep them too high for too long, you risk slowing the economy down too much, potentially even causing a recession. By cutting rates, the Fed would be taking its foot off the brake, making it cheaper for businesses to borrow money to expand and for consumers to get loans for cars or homes. This stimulates economic activity. The stock market, being forward-looking, is already pricing in this possibility. Stocks, Asobana growth and tech stocks, tend to do very well in a lower interest rate environment. That's why you saw the Nasdaq, which is full of tech companies, react so strongly. This whole scenario is what's known as a soft landing. It's the ideal outcome the Fed has been aiming for, bringing inflation down to its target of around 2% without crashing the economy into a deep recession. For a long time, many people were skeptical that this could even be achieved. They predicted that the only way to kill inflation would be through a painful economic downturn. But data like this, November CPI report, gives a lot of credibility to the soft landing theory. It suggests we might just be able to have our cake and eat it too, controlled inflation and a resilient economy. This optimism is what fueled that massive rally. Investors are essentially betting that the worst is behind us, and that the economic environment in the coming year will be much more favorable for corporate profits and stock market growth. Now, it's crucial to remember that one report doesn't make a trend. The Fed will want to see a consistent pattern of cooling inflation before they make any definitive moves. They'll be watching the next few CPI reports, as well as jobs, data, and other economic indicators very closely. They want to be absolutely sure that inflation is truly vanquished and not just taking a temporary breather. But the market sentiment has clearly shifted. The fear that dominated 2022 and much of 2023 is being replaced by a sense of optimism. This is a classic case of the market reacting to good news and recalibrating its expectations for the future. The narrative has changed from inflation is out of control to inflation is under control and rate cuts are on the horizon. So what should you do? Well, it's never a good idea to make knee-jerk reactions based on one day's news, but it is a great time to review your portfolio and your financial strategy. Does this new information change your long-term outlook? For many, it reinforces the idea that staying invested for the long haul is the right move. Trying to time the market is nearly impossible. Many who were sitting on the sidelines in cash, waiting for a crash, just missed out on a huge rally. This event highlights the importance of having a plan and sticking to it. The economic landscape is always changing, and there will always be new data to digest. But the fundamental principles of investing remain the same. The optimism we're seeing is a great sign, and it supports a more positive outlook for stocks heading into the new year. We'll be keeping a close eye on the Fed's next meeting and their official comments. What they say will be just as important as the data itself. Their tone will tell us a lot about their thinking and how likely rate cuts are in the near future. But for now, the market is celebrating, and it feels like a well-deserved celebration after a long and difficult fight against inflation. This is a pivotal moment for the economy and the markets. The story of high inflation and aggressive rate hikes that has defined the last 2 years is reaching its final chapter, and a new, more optimistic chapter seems to be beginning. It's an exciting time to be an investor. Thanks for tuning in to break down this major market-moving news with me. If you found this explanation helpful, be sure to hit that like button and subscribe to the channel for more updates and analysis on the economy and the stock market. Let me know your thoughts in the comments below. Do you think the Fed will start cutting rates soon? I'd love to hear your take. Thanks again for watching, and I'll see you in the next video.